Good morning, viewers. Welcome to ST Money's Morning News, your weekday business news channel. It is Thursday morning, December 19, 2024, and I'm your host, Sunil Thakker of Sunny Talks Money. Let's roll. Waning enthusiasm for rate cuts at the Federal Reserve meeting jarred US markets on Wednesday, sending stocks lower and pushing Treasury yields and the dollar sharply higher. The Fed cut rates by 25 basis points to the 4.25 to 4.5% range, and its summary of economic projections (SEP) indicated it will make rate cuts totaling a half percent point by the end of 2025, giving the solid labor market and the recent stall in lowering inflation. US stocks plunged on Wednesday, with all three major indexes posting the biggest daily decline in months after the Federal Reserve cut interest rates by a quarter of a percentage point, but disappointed some investors with projections that signaled a more cautious path of easing next year. The Dow and the S&P saw the biggest one-day percentage decline since August 5, and the Nasdaq saw its biggest daily decline since July 24. The S&P 500 lost nearly 3% and fell below the 6,000 level to close at 5,872, suffering its worst session since August. It was the worst loss for the S&P 500 on the day of a rate decision since 2001. The tech-heavy Nasdaq 100 dropped 3.6% or 716 points, the most in 5 months, to end the day at 19,392. Meanwhile, the Dow Jones Industrial Average fell more than 1,100 points after the Federal Reserve signaled it might keep interest rates higher than investors expected in 2025, clinching its 10th straight down session, the longest losing streak since 1974. The Dow was down 2.58% to 42,326. The blue chip index gave up an early gain and fell for a 10th consecutive session, its longest losing streak in 5 decades, after Fed officials pared rates by a quarter percent point and disappointed investors by signaling just two more cuts next year. The declines followed the Fed's widely expected interest rate cut, its third of 2024. They accelerated after Fed Chair Jerome Powell's press conference spurred concerns that interest rates might not go down again anytime soon. Despite the declines, the Dow is up nearly 12.3% on the year, while the S&P has rallied about 23% and the Nasdaq has shot up more than 29%, lifted largely by technology companies and enthusiasm around artificial intelligence, along with the prospects of a lower rate environment and, more recently, the hope of deregulation policies from President elect Donald Trump's incoming administration. The small cap Russell 2000 dropped 4.4%, its biggest drop since June 16, 2022. Small cap stocks are seen as more likely to benefit from a lower interest rate environment. Stocks have notched records this year, but inflation has been sticky. However, investors are also worried that some of Trump's expected policies, such as tariffs, immigration, and tax policies, could boost price growth that could rekindle higher inflation. The CBOE Volatility Index, an options based gauge of investor expectations for near term stock market gyrations, jumped 11.75 points to close at a 4 month high of 27.62. Bond yields climbed, with the yield on the benchmark 10-year Treasury note rising to 4.493% from 4.384% on Tuesday. The yield on the 2-year Treasury, which often rises with investors' expectation for short-term rates set by the Fed, rose to 4.35% from 4.239%. Higher interest rates are usually seen as a drag to the equity market, boosting the appeal of less risky assets while crimping the ability of companies to grow earnings. Each of the 11 major S&P sectors were lower, with real estate down 4% and consumer discretionary leading declines of 4.7%. Cryptocurrency related stocks fell, with losses accelerated after Powell said The central bank is not allowed to own Bitcoin and is not seeking a law change in order to do so. There has been speculation Trump's incoming administration might seek to build a government owned stock of the asset. Bitcoin fell 5.2% to 886. MicroStrategy tumbled 9.5%. Mara Holdings plunged 12.2%, and Riot Platforms fell 14.5%. Megacap Big Tech had an especially rough session. Tesla was one of the worst performers in the S&P 500 after shares closed down over 8%. Amazon, Microsoft, and Apple fell over 4%, 3%, and 2% respectively. Facebook owner Meta and Google parent Alphabet also show sharp drop in their shares over 3%, while AI chip maker Nvidia shed a little over 1%. General Mills shares dropped. The breakfast cereal maker scaled back profit expectations as consumers grow weary of high food prices. In commodities, West Texas Intermediate crude fell 0.1% to $69.99 a barrel. Spot gold fell 2% to $2,593 an ounce. Two key events this week: US revised GDP on Thursday, and US personal income and PCE inflation on Friday. That's it from me for today, folks. I will see you again tomorrow morning. In the meantime, please subscribe, share, and like this video. Thank you. Happy investing, stay inspired, and remember, it is all about money.